This Week in Economics on the 17th of May 2019 from WBRN Radio and on the Bostonred Network, the Numbers Man unit. This episode is, 500 plus here. And we were looking around over at YouTube, and YouTube automatically classifies the broadcast hours of audio over there. We'll come with some visuals here later. Hopefully, we were hoping to have the visuals, at least some visuals up there by the mid part of April, but we've not gotten there yet, but we shall get there. We were classified over there on the category of entertainment. Well, I suppose the economy is entertaining, particularly with all the tariffs on, tariffs off, and various other the only we can say shenanigans. We probably have to leave it at that in the economy. But their categories are somewhat arbitrary, so you can find us on the news. They don't have economics there, and there's no subcategory there, but there are keywords, and we noticed the summary from the meeting of Berkshire Hathaway in Omaha, Nebraska. The Oracle of Omaha was presiding, and his sidekick, Charlie Munger. We'll have a little bit more of that we've just folded into this broadcast. Basically, we'll be talking here about consumer confidence, our friends at the University of Michigan, and their latest survey there. We also have from the Housing People, the index of the National Association of Builders and index with Wells Fargo. That's kind of an interesting situation. Wells Fargo is in the mortgage business. What I would wonder why and how that came about, because Wells Fargo is no doubt a disgraced organization. We'll have to explore that further in the scheme of things. And from the Department of Commerce, we have the retail sales there. And from, let's see, whom else here? The Bureau of Economic Analysis, real personal income for states and metro areas. I wonder why this is 2017. Nonetheless, it was released on May the 16th, 2019. And we'll get to that in a minute here. And let's see what else we have in the hopper here, so to speak. Let me fly through here, and industrial production falls. That's one of the things we have here now. This is from CNBC in April. This is from the Federal Reserve. I don't have it up yet, but we'll definitely get it back in here. Department of Commerce was on retail sales. We do have it, in fact, here. The advanced monthly sales for retail and food services, that was released on Wednesday, the 15th of May. We try to keep these as current as we can possibly do here. Okay, this is that. And let's see where we'll start this off. This is from Reuters. We're using in this presentation as a backgrounder Reuters, CNBC, and we'll have the BBC in here, even Yahoo Financial. So we'll go over a number of topics here. It's kind of interesting. At Reuters, they specify it's a 4-minute read. And we'll talk about Bitcom, where Bitcom is. Bitcom has been up. Bitcom has been down. So we'll look at that. We'll start off here with Reuters, I suppose. U.S. recession risks rise as U.S.-China trade tension heats up. That's according to a poll by the Reuters people. Over last month, the U.S.-China trade war has boosted the risk of a U.S. recession. It said a strong majority of economists polled by Reuters, who put the chances at next 2 years. Now, this is next 2 years, at 40%. We put it at much higher at Crest Analytics than a 40%, particularly as things are now. Now, tariffs on steel and aluminum with Mexico and Canada, those have been taken off. So we're sort of going around and round here. Let's see. This is up from 35% in the last poll. The first time it has dropped slightly from where it held since December of last year, before the crashing sell-off of the market that was in 2018. Well, the trade war with China, I guess now is the time to make a comment on it, has been ongoing. The tariffs have been set, and what happens in the channel, there's an anticipation there of these tariffs coming on in 25%. So what is happening is the channels themselves, these are the various retail and manufacturers, etc., are buying a product at the current rates, or were at the current rates, and those are on their way to warehouses if they've not been shipped yet. In other words, in the process of being shipped. That takes some of it off. Warehouses, of course, these days are completely automated. Now, only a slight percentage, a single-digit percentage, said that it's likely this year. 1/4 of economists polls see it greater than 50% possibility within 2 years. 2 years is a very, very long period. I'm not certain about their models to do forecasting. First of all, we're in 2019. 2020 will be an election year, and things in an election year can be volatile. And if we go back to 2008, the Depression started in the middle of the campaign that was between Barack Obama of Illinois and the late Senator John McCain. And of course, in 2009, when President Obama entered the White House, he entered a depression, and the rest, as they say, is history. But forecasting of these types of events have not been as good as possible. The forecast for April-June is a sharp downgrade from 2.5 in last month's polling, owing in part to unexpected strong report for January and March. Growth is forecast to slow to 1.8%, below the trend by Q4 of next year. That's kind of hard to say, because you have these interesting situations here. We've had it before where there have been forecasts of 2 in the current quarter from 3.2% in the first 3 months of the year, and median forecasts for of 120 economists that they have polled. I'm assuming that these are both working economists and business economists. 75% of economists, are 52 of 70, who answered additional questions on what the trade development has done to risks in the U.S. recession. They say it has increased, no doubt about that, but it's a mixture of things. And that is where some of the difficulty is, because you have most of that stimulus has gone from the tax cut, but yet at the same time you have relief to farmers that farm as their crops, soybeans, etc. At least they're proposing some for them to negate some of the problems with tariffs. Tariffs themselves always have a negative impact on a product. They've never accomplished what they wish to accomplish, period. But if you leave tariffs on for a prolonged period, it would say a year, 6 months, 6 to 12 months, they become a norm, basically speaking, and because the channel in itself, in terms of its exports to a particular country, they have adjusted the price. Walmart made a statement that their prices would increase. Now, that will only increase after the inventory that they currently hold is exhausted. And they do have capacity there. Let me finish this up here. We won't want to go on and on about this. We have a recession. It will likely be caused by the Fed. I'm not sure who. This is somebody named Garrett Cloud. He's the co-chief investment officer of fixed income FCI. There, the underlying weak demand outlook forecast for core PCE. The Fed preferred index gauge was cut to 1.7 from 1.9 this year to 2% and 2.1 next year. That is their mandate there. And we'll talk a little bit, not in this broadcast, but we have in other broadcasts talked about negative interest rates. They are upon one, but that in itself does preclude the Fed from doing some of the things the Fed would like to do. Let me just move along here. We'll get into the Dow U.S. stocks, and this was on the 17th, but today actually dropped because of problems, and Dow will get to it later here. The negotiations, of course, with China is in flux. We have the Huawei situation looking us in the eye, straight in the eye. So we have that particular situation going on. That index is National Association of Home Builders, and it's now / Wells Fargo Housing Market Index. For single-family housing, it rose 3 points to 66 in May. That's according to them. The highest reading since October, but lower than in May's level of 70, and somewhere above 50 is considered positive in the index, as in many of these indexes out here are. The index free components current sale conditions rose 3 points to 72. Sales expectation next 6 months rose just 1 point to 72, and buyers traffic moved up 2 points. Mortgage rates are hovering at just around 4%. They've been around 4% for quite a while now. A challenging quarter in 2018, while they peaked to 5%. This is the lowest interest rate environment, along with ongoing job growth, and is contributing to gradual improvement in the marketplace. That's according to the chief economist Robert Diaz. At the same time, builders continue to deal with ongoing labor shortages and rising material costs. And let me see if I can get this particular one out here. This is by someone else. Nandra is a PhD. This is a special study out here. Not sure if we want to go to this one. We were thinking of, obviously, something else. This is a study. Move over to housing index here, and this actual release date. Sorry about that. They changed this over by a name, I suppose. Find what we're looking for here. Maybe, maybe not. There's another housing index here, and well, we'll see if we can ascertain whatever out of this. Should you get this up here? This is where we are here. Sometimes we're not sure where things are showing up. Quite literally here. Sure, we get the PDF here to get this index up. Yeah, I'm not certain at housing. This is a housing market index from these particular people, and basically it was at 72. I think that's what present sales at 76, 77. Prospective buyers. This is single family here, seasonally adjusted. And if we go to multi condos, you can see those are lowers at 57 and 58 for present sales. Expectation at 62, and we go to multifamily at 58. That's pretty much consistent here with what is going on here. They've evidently split their indexes up here, and we won't. We'll leave it as is here. And with our housing associates here, we can't get it anyway. Doesn't matter. Okay, industrial production. This is from CNBC. This is from the Federal Reserve here. Industrial production fell 0.5 amidst big decline in auto parts. The situation. Let me see if I can work around this. I don't want to take a lot of time doing it, but because there are several categories here, we get to this. Here we go. This is from the Federal Reserve, and let me just do a PDF on this. Here we go. Industrial production fell 0.5, as we said. Rates of change in previous month were revised down. Output is now reported to have declined to 1.9 in the annual at an annual rate in Q1. Manufacturing production moved down 0.5% in April after being unchanged in March. Let me just get this up here. This is very important. We look at it kind of historically here. And percentage change was a negative 0.5. That was industrial production. And consumer goods, I want to look at it. In April, at 104.8, change there was, let me see, in April, negative 0.13, and from April of 2018 to 2019, it was a negative 1.2. This is consumer goods. Business equipment at a negative 2.5. Wait a minute, just a second here. That was business equipment, at a negative 2.5. And the final product was at a negative 2.1. Consumer goods at a negative 2.5. Get it right in a minute here. And business equipment at 1/10. And construction at a 0.4 there. Materials. This is in from year to year here at 3.2. And there was a change of 1 from year over year, 18 to 19 here. And basically, mining advanced 1.6 in April, while the index for utilities fell 3.5, and at 109.2% of its 2012 average. Total industrial production was 0.9% higher in April than it was a year earlier. Capacity utilization for the industrial sector declined 0.6% point in April to 77.9. Most major groups posted declines in April. The production of consumer goods we reported 1.2% with declines in both durable and non-durable. The index for durable consumer goods moved down 0.8%, mostly because of a drop in output of auto parts, while the output of non-durables was held down by sizable declines in both chemical products, consumer energy products, production decline for business equipment, construction equipment, business supplies, but output for advanced defense and space equipment and materials. Amongst the component of materials, a drop for durables was more of an offset by gain for non-durables there. Let's see. Industry groups, manufacturing outputs down 0.5%. In April, the production of durable goods fell 1%, but for non-durable goods only edged down. Losses of 2% or more were posted by machinery, electrical equipment, appliances, components, motor vehicles, and parts. Amongst the non-durable, the results were mixed. Large gains were recorded for apparel. That's interesting. That had been down. Paper and products, and large declines were recorded for textiles, product mills, and by plastics and rubber products. The index for rubber manufacturing, publishing, and logging declined 0.3%. The output utilities fell 3.5 in April, and with declines in the index of both natural gas and electric utilities. Demand for heating decreased last month because temperatures were warmer than normal. After having fallen for three consecutive months, mining output stepped up to 1.6 in April, and it was 10.4 above its level a year earlier. Capacity utilization for manufacturing dropped 0.5 percentage points in April to 75.7. Capacity utilization for mining increased to 94.4, remaining well above the average run of 87.1. Okay, we'll leave this one at that. We'll just attach this particular table. Now, retail sales, we'll go to that. Retail sales declined. This is from CNBC in April as Americans cut back on spending. Kind of interesting here. In retail sales, this is from the Department of the Bureau of Census, announced the following advanced. Let me just get this up a little bit here, and we'll attach this also. Advanced estimate of retail sales, adjusted for seasonal variations, holidays, trading, off-trading differences, but not price changes, was $513.4 billion, a decrease of 0.2% from the previous month, but 3.1% above last April in 2018. Total sales for February through April period were up 3% for the same period a year ago. To February 2019 to March 2019 change was revised from up at 1.6% to up at 1.7%. Retail sales were down 0.2% from March 2019, but 2.8% above last year. Non-retail sales were at 9% from from April of 2018, while sporting, hobby, music instruments, and bookstores were down 8.5% from last year. And throwing musical instruments, not good there for that. Anyway, May advance monthly report is scheduled on June 14th. And that is the end of our report on sales. And we'll put it on. And this is, won't spend a lot of time on this, except mostly background. Real state personal income grew at 2.6%. This is in 2017 after increasing 1.5% in 2016. That's from the Bureau of Economic Analysis. Percentage change in real estate personal incomes ranged from 4.5% in New York to a negative 1.3% in North Dakota. Across metro areas, the percentage change ranged from 14% in Midland, Michigan to negative 5.9% in Enid, Oklahoma. We do this to kind of get the states with fastest growth in real personal income were New York, Oklahoma at 3.9%, and Rhode Island at 3.8%. Historically, Rhode Island in New England has always lagged behind. Two states that had declines, North Dakota at negative 1.3%, and South Dakota a negative 0.4%. States with the slowest growth in real personal income were Iowa, that's interesting there, at 0.3%, and New Mexico at 0.6%, and Kansas at 0.8%. Largest metro areas with population greater than 2 million and fastest growth in real personal income, New York, Newark, New Jersey, and Jersey City, New York, and Pennsylvania at 4.3%, and Seattle, Tacoma, and Bellevue, Washington at 4.3%, in Austin, Round Rock, that's where the Dell Computers place is, at 4.1%. Largest area with slowest growth were Los Angeles, Long Beach, Anaheim at 1.6%, St. Louis at 1.8%, and Pittsburgh. Kind of surprised there. We don't know how they're doing this year's regional price parities. This is in 2017. Hawaii is here. States with the lowest. Mississippi at 85.7, Arkansas at 86.5, and Alabama at 86.7. Some with the highest retail price parities: San Francisco, Oakland, Hayward, California, New York, Newark, and Jersey City, and Washington, Arlington, Alexandria, and that was at 1.8% there. Cincinnati, one of the lowest at 90, Cleveland at 92, and again St. Louis. And that is primarily our regional status here, where the regions are. You kind of get an idea of what's going on. Here's across these various ones, personal income in millions of dollars. We look at in the U.S. with 16 trillion. And the percentage change from 2016-2017 was 4.4%. And we look at something like Alabama, they were at 190 million to 198 million, 4.1%. We won't go through all of these. Arkansas at 3.8, that was a change. California at 4.6. They were at 2 trillion. 25941, and it was 2,465,000,000. Somebody sent in a comment about a trillion in dollars, a trillion, how many decimal points there, and I'd not heard that question before, but basically we do it to the 10th power. Figure it out. Anyway, you're not going to write a tree. And I think maybe in grade school we wrote a tree. I don't know. Anyway, Louisiana, the change for the 2-year period is at 2.5. The Commonwealth of Massachusetts 4.3. 44 billion to let's see, 463 billion. Mississippi way down there, but they at 1.6 billion. To 1.9, 2.3 percentage change there in Mississippi. Whereas New York had a 6% change. In North Carolina, 4.7. North Dakota, 0.7 in the decline. And they will more than likely be in a decline for some time. West Virginia at 3.4%, a smaller economy there. At 67 billion up to 69 billion. Wyoming at 270,000, and Wisconsin. No, excuse me, that was Wisconsin at 3.6, and Wyoming at 2.4. The maximum and minimum here, you had $2 trillion economies, and minimum was 31 billion. I don't know. Per capita personal income by states. In the U.S., the average of 49,000. It moved to 51,000 in 2017. And the percentage change per capita income here in chain dollars. Anyway, 3.7 was the change in the U.S. And in Alabama, they went from 39,000 to 40,000 in 2017. We don't have anything for 2018 yet, so hold on. District of Columbia from 77,000. This was per capita personal income dollars to 79,000. Hawaii from 50,000 to 52,000. You see growth in most places here. Illinois was at 52,000 in 16-17. 54,000 percentage change there was 3.4. Kentucky was at 39,000 to 40,000 there. In Louisiana at 42,000 to 43,000. The Commonwealth at 65,000 to 67,000. That was a 3.7% change there. In New Hampshire, from 56,000 to 59,000. And it was 61 to 65,000 in New York. In North Dakota was much larger, 52,000 to 52,000. It was a negative 0.8, a lot of fracking going there. Oregon from 46,000 to 48,000, 3.8 there. Rhode Island from 50 to 52,000, respectable there. South Carolina at 40 to 41,000, 3.3 there. South Dakota at 4/10. You probably see a further decline there with them. And Texas at 46 and with 47, 2.7. Not a lot in year over year in the state of Texas. West Virginia low at 36,000 to 38,000, 4.2 there. And Wisconsin at 47 to 48. Wyoming reads 55 to 57, 3.4 there. So that is where your real per capita personal income, that was by states, and if you want to do real per capita personal income, this is chained to $2,012, a little bit different there. We won't go into that distinction. I'm not sure if we'll throw this up or not. Anyway, jump back here to our survey of consumers. Is from the University of Michigan. In May of 2019, we were at 102.4. That's the index of sentiment. In April, we were, at 97.2. And the current economic conditions at 112.4. We were at 112.3. Not much there. The index of consumer expectation at 96, and in April we were at 87.4. And if we go back to last year, a little higher, we were at 87.1. A change there of 9.8 there. And Dr. Curtin always here. The index of consumer sentiment surged in early May to its highest level in 15 years, and all the gain was in the expectation index, which rose to its highest level since 2004, while the current condition index was virtually unchanged and well below the cyclical peak set in March of 2018. Consumers viewed prospects for overall economy much more favorably with the economic outlook for the near and long term reaching its highest level since 2004. The gains are recorded mostly before the tariff negotiations with China collapsed and the Chinese responded with their own tariffs. As shown in the chart, reference to tariffs peaked in July of 2018 at 35% and have generally declined to 16% in early May. The July peak corresponded to the initial imposition of tariffs, and to be sure, negative reference to tariffs rose in the past week and are likely to rise further in later May and June. For those who held negative views about the impact of tariffs on the economy, pricing has valued on the expectation index from 25 points lower, and expectation to year ahead inflation rising rate to be at 0.6%. Apart from a direct impact of tariffs and prices, raising tariffs could cause a general loss of confidence, which further diminishes the pace of consumer spending. At present, the data points towards moderate spending growth in the year ahead. More or less, the data indicates the corrosive pack of escalating tariffs. Well, some have been taken off, and some have been put on. Let me just quickly here. Hewlett-Packard Enterprise bought the supercomputer maker Cray. They're out of Seattle. Deal was valued at $1.3 billion. They were one of the bigger supercomputer operations, but the supercomputers are no longer there. They're headquartered in Seattle, Washington. Has about 13 workers worldwide and earned $456 million in revenue last year. So they can do some things. There's some businesses that have these, but by and large, far less of businesses than in prior times have handled this particular situation. Let me just check our time here. We'll get over to, I think now we'll get over to the BBC. And we probably will go to Yahoo Financials to do the numbers. This is U.S. limits steel and aluminum tariffs on Canada. Oh, this also is on Mexico. Well, anyway, in joint statement, U.S. and Canada announced that a 25% tariff on steel imports and 10% on aluminum or aluminum will end in 48 hours, while expected U.S. and Mexico will make a similar announcement. It was made there, and this is the U.S.-Mexico-Canada agreement. Remember, the agreement meant to replace the notorious NAFTA, and that's all we have from them. We'll see. A big headline, a business headline, and Cray was also a headline here. It jumped 18%, announced when it was announced there, and this is from the BBC. Cray features a number of times in the top world's top 500 supercomputers, and used the likes of Met Office to improve weather forecasting. Of course, IBM is in that particular game also. Let's just take a quick look here while we're looking at the top. This is from the Department of Energy. This is November of 2018. This is one at Oak Ridge and Sierra at the Lawrence Livermore Labs. And it's a Cray model here. I won't go into which model it is. Oh, these are sites, actually. Well. Anyway, it is mentioned, so we need say no more of there. Let me see if we can get back to the business report here. Anyway, we'll jump back here and oops. This is how we deal. China moving on a lot of tensions involving that particular enterprise. They threatened to retaliate over U.S. Sanctions. The Trump administration effectively blocked Huawei products from the U.S. Being used in networks in the U.S. They did put a 90-day exclusion on that order to allow companies primarily in rural areas that use Huawei's telephone equipment to, I suppose, get something else. So basically what Huawei said, restricting their products will not make the U.S. more secure. We agree there as far as that is concerned. In the U.K., this is the 5G network there, but they're basically doing it. France, Germany, Belgium have not barred Huawei's equipment, but Japan has from public contracts. The U.S. has raised tariff to 25% on $200 billion of Chinese product. So that is the way they are going. Let me get over here. I think what we'll do, we'll go back to the BBC and we'll do our numbers, and then we'll come back to Yahoo, so we can do the FTSE and some of the other things we normally do a little easier here, and then we'll catch up on some things that are not done. This is the FTSE 100. They were down 0.7%. In Amsterdam, they were also down 0.22% there. In France, down 0.18%. The DAC in Frankfurt was down 0.58. A lot of red here. The Eurostrasse is down 0.38, and in Madrid they were down 26%. And in Bombay, they were at 1.44% there, 537.29. Hong Seng was down at 1.16% there, or negative 3.28.62, and the Nikkei was at 0.89%, or 187.11. And the, where are we? Dow was down 0.38% there, or 8.68. That was a change there in the negative. And the Nasdaq was down 1.04%, or 81.76% there. And the S&P 500 was down 0.58, or 16.79%. Now we'll go to Yahoo Financials to finish this off here. We got the Nikkei there, and we did the FTSE, and let's see, where else are we going? The VAX is at 15.96. This is the CBOE volatility index. There it was up 4.38% there. That is the VAX at 15. And we look at a little historic data. We went over the VAX before here. Well, it's been higher than that, actually. It's been up to 20.40%. And what's now at 15.89. The low at 14.48. That was today on the 17th. And we've had some weaker VAX. So the VAX is in pretty good shape, actually. All right. Hadn't done that in a while. Glad to do it. The Russell 2000 change there was a negative 21.48, or 1.38% there. And let me just, well, we got crude oil here. It's at, this is Brent crude, I'm assuming, at $62.71. Go back once more to the BBC here, where we can sort out things a little bit differently here. And you get our commodities here. Brent crude, boy, that was all off. Anyway, the change there was negative 0.56% at 72.61 there for Brent crude, and West Texas was at 62.76. They must give us West Texas there. Futures, T-Bone picking is still jumping for joy. And gold on the Forex at $1,291.70. Let's go back. We can get silver. Silver is at $14.36. And the 10-year T is at 2.3930. This is from Yahoo, incidentally. Back we go. We've done the S&P 500. Oh, well. Anyway, so much of that. We did get in the Russell 2000. The Russell 1000. This is 2000. Why is the Russell? Not sure here. I don't use this service much, so therefore okay. Anyway, nonetheless, let's see if we can get this very quickly here. We get the Russell 1000 here. As usually, it's the Russell 1000. We see it more on small caps is what it is. Okay, it is down 0.64. I guess we don't need to go any further on the Russell. As to where the Russell is not. Here we go. We'll go to Market Watch. We'll just kind of mix this up a bit here. Various ones have various things. Anyway, it closed at 1,538.91. It was down 10.14. This is the Russell 1000, the small caps here, and a list of others here also. For some reason, even Market Watch has a bad situation of listing and not the Brent crude. Anyway, that's really not a big situation there. Market Watch is one. Yahoo Financial used to be pretty good. We utilized them for the Berkshire Hathaway meeting there. Let me just quickly. We need to look at our time. We already covered Bitcom there. This is the Omaha Public School Pension Fund that was singled out. Buffett called it a case of how an over-reliance on alternative investments can lead to weakness. This is the first time we talked about this. Incidentally, on their building, they've taken a 20-year lease there. That is the Berkshire Hathaway suite of offices there. And they have been there for the 20 years. And they've had their offices there in the Hewitt building since 1962. So they've been doing this for a very, very long time at the same location. And the stockholder asserted that Berkshire Hathaway would have expanded its cash pile to $155 billion over the $118 billion if it had kept its cash in a stock index fund versus treasury thing is a perfect rational observation, Mr. Buffett said. He expressed a willingness for Berkshire to change its investment strategy around its excess cash in the future. He said the change would be something his successor might wish to employ. He's talked a long time about index funds. Index funds are index funds, but treasuries are much safer. Online competition for their retailers, the jury's out on that, according to him. The Nebraska Furniture Mart, if you've never been there, go there, in Omaha, does a significant dollar volume excuse me, in online sales. He said people will still come to the store to pick up what they buy online. And for this is incidentally from the Omaha Herald. Buffett owns it. Kraft and Heinz, I have some Heinz ketchup somewhere around, is too old school amidst the challenges facing them. Buffett endorsed the fundamentals of the company in response to a question that criticized them as missing changing consumer preferences with that brand of Heinz and Kraft. Buffett said he was not worried about the brand. He said certain products are strong or growing at 1 to 2%, while others are declining at 2 to 3%. Well, that changes too now. The Heinz and those companies make more than ketchup. They own 27% of the Heinz corporation there. Is Buffett disappointed in Precision Cast Parts? They bought it, I remember when they did, for $32 billion in cash. Munger said since that has been low, and stockholders want to know if Buffett expects a turnaround. Buffett acknowledged that Precision's margin are lower than expected, but he said he sees earnings in a year or two improving fairly significant. Something about the new business managers there. These characters have been around here. Greg Abel, Vice President, Non-Insurance Business, was also called upon to talk about a few topics, including renewable energy. They are somewhat in there. And they also have Jan, I suppose I pronounce his name. Anyway, Geico has been improving. If you ever listen to a baseball game, they're all over the place. Competition between Geico, Progressive Insurance, to be number one auto insurance. Buffett said both are terrific, well-run businesses, and that they sometimes copy each other. But Buffett says Geico has advantage in expenses. I feel good about Geico asked to respond to Elon Musk, and he's thinking of going in the insurance business. At Tesla, I think some other things he's done is not as good. Buffett said he worries about Progressive as a competitor to Geico more than automobile being in the business. Berkshire said Berkshire is an ideal home for insurance business because it has a massive amount of assets that aren't connected to natural disasters. No doubt about that. They also have reinsurance business too. On Amazon, disputes that Amazon investment wasn't a value. Boat managers are value investors who go through some calculations. They're talking about Combs and Wetchler. Buffett said smart people, well, everybody's smart, I suppose, with a pile of cash of $112 billion, quite a bit of money. In his comment on Bitcoin, he said Bitcoin technology, the blockchain technology is built on some promise. Blockchain is very big, but it didn't need a Bitcoin for that. No doubt about that. We use blockchain. A lot of people use a blockchain. Tim Cook, Bill Gates, it starts with Buffett. An unusual assessment of cameo celebrities, including Bill Gates and Cook on the scene. Gates and Buffett waxed as nostalgic as they walked through an old-fashioned candy store. Well, anyway. And remember the 13-year-old there. Anyway, the end of that. Bitcoin has had its ups and downs. Let's go very quickly. Bitcoin sunk abruptly after several weeks of recovery. This is Tokyo, again, Reuters, and this is where we'll wrap it up. The price of Bitcoin abruptly shrunk more than 20%, move that didn't appear to be a particular trigger, and came after a strong recovery in the currency. Bitcoin fell to $6,178. That is at Bitstamp Exchange, down 21.6% from the previous close. They were down 8.2. They were at $7,236. They've fallen. They were up closer to 10,000. The sudden fall does not appear to have driven by any particular news item. No doubt about that. Bitcoin is up. Bitcoin is down. And with that note, it will do it for us. This week in economics on the 17th of May, 2018. We partner as usual with Cranston Analytics. This is a numbers man, aka MA here, and this will do it for us. We invite you to listen to our programs on the channel, the Bostonred channel. The political report, known as just Bostonred. The open source report, which we'll have this weekend also. That is our open source, open hardware technical presentation. We've been a little bit tardy here, but we'll get one out this week. We have it now about 70% finished, 75% finished, so we'll get that out. And later today on the 18th, we'll have this weekend. Oops, sorry about that, wrong one. The political broadcast, the week that was. Get that. I guess we're thinking too much of it. Anyway, nonetheless, for those in business, make it a productive one. And for the consumer, your confidence evidently is up as they measured. But I would take on that's weaning. That's sort of with the psychology of the of the economy. People see relatively low unemployment, but at the same time, what example was Amazon displaced, I think, roughly 1,200, maybe more, workers that were doing packaging with automated packaging. You'll see more of this coming out. And what we're seeing is that smaller numbers, 1,000 or less workers, are being laid off, so we don't get the impact as, say, if you were laying off 2,000 or 3,000. You don't have that, because in most settings, and these are in so-called fulfillment centers by Amazon, but even in auto plants, etc., rarely do you have 2,000 workers or more laid off at once, because the plants just simply usually are not that large. And in many manufacturing plants, they top off at about 1,500, usually less. More 500 plus or less. So this is why it's a little bit difficult to gauge where things are. Our seesaw model does the best it can.